Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Tuesday. I was going to say it felt good to get the first real complete week of the new quarter and of the new month started. One would think it'd be that great, but instead we get two very interesting events yesterday pretty early. One, about an hour and a half before the bell rang yesterday, we get some sort of vague news about the rebalancing in the NASDAQ. If you haven't caught up on that, I had a few members in the Sector Secrets Mastery that mentioned, hey, Rog, what's this news about the NAS? I said, yeah, I kind of saw it, but I don't really see a lot of detail. And as the morning went on, and even the NASDAQ futures themselves sort of blew off the info. And then as the morning progressed, we started seeing the sell-off in those 8 stocks, the Magnificent Seven as they're known, Microsoft, Apple, Meta, the Googles, both of them, Amazon, Tesla, Nvidia. These names started to struggle as the NASDAQ apparently is going to be reweighted to take away that dominance of about 55% of the weighting in those 8 names and lower that to about 40. So now there's 15%, give or take. I don't know what the actual amount is going to be, but it's going to be right around 15% is going to then be allocated to the other, say, 92 stocks or some of the 92 stocks, right? We're not going to see all 92 benefit from increased weighting as we decrease the weighting in those names, but this is where we're at. The names that will be adjusted, not removed or added, but the percentage weightings that are going to be adjusted will be announced Friday, and that'll be the 14th. And then 10 days later, the actual rebalanced index will be presented to the world, and that'll be on the 24th. So that's what we're in the middle of right now. The question is, for how much longer do we continue to see some of these stocks under pressure as traders are anticipating that they will have, less weighting in the broader averages? So of course, this includes weighting in any ETF that's weighted like the NASDAQ is. So if you see something weighted like the NQ or the QQQ, they will have to adjust to reflect this new weighting. So pretty interesting times. And that was the first thing we were presented with yesterday. Then we move on to FOMC member Barr. And he mentions that the capital requirements for the big banks are going to be increased. Well, funny enough, some of the best strength we saw yesterday was in the regional bank sector and was in the big bank sector, and they got a little sloppy. But overall, I'm going to stick with the trends that are in place. So, the question might be, Rog, does this rebalancing change the trajectory of the NASDAQ? To me, not in any way. Not in any way. We might have to see a little bit of adjustment as traders might panic sell some of those big 8 stocks, those big 7 companies, and speculation then comes around for what might be companies that'll benefit. So yesterday was my turn for the weekly watch list. So if you're a member at Simpler Trading, you'll see some notes and a video went out, and I described where I was looking at for the speculation. Of course, we don't know till Friday, but there's obviously speculation already. So amidst the sell-off in those 8 names, the weakness, there were some names that were increasing in value. And that's where the speculation is, that some of those 15 or so percentage points are going to find themselves in other stocks. Adobe was one of the obvious standouts, Intel, Qualcomm. You can check that out. And this just ultimately might give us the pullback in tech that I've been waiting for. Not a reversion to the mean, but a pullback to the daily price movement range. We want to be opportunistic about all this. We want to be aware of there's opportunity behind all of this. All right, so that is that. Let's jump on over to our questions. Kicking it off with, and my pleasure. The rebalancing. And I believe when you log into the Simpler Trading website, and let's say you jump on over to, whatever your membership is, if you scroll down to the bottom of the dashboard, I believe that's where you will see the video and the notes. Yeah, that's what it looks like. So if you jump on into the Sector Secrets Mastery Room, or you jump on into the futures room, that dashboard, I should say, not the room, the dashboard, and scroll all the way down, you'll see the weekly watch list with moi for the week of July 10. And then when you click on that, by the way, again, you'll get my notes as well. So there's I think it's about a 9-minute video. And then I believe you'll see, the notes, the watch list there as well. All right. So the rundown and the watch list. Sweet. All right. So that's where we are. Thank you. I appreciate that. Okay. So let's get to our questions as always. And first up is PM asks, is there any way to buy just the daily price movement range? I bought the volume decoding class this week in the markets, yearly HPMRs. PM, give the office a call. Lorna Bot just gave you the there we go, the number. Yeah, give them a call. Yeah, I believe we are working on that so people can just grab that daily price movement range subscription, as you can also get that HPMR subscription. And I hope you all scoop that up with that sale that we had for the 4th, 30% off, really great sale. So we'll have more on that coming, I think, also this summer. But yeah, just give the office a call. I think they're working on making that subscription available as a standalone. So thank you for the question. All right, Nancy asks, Home Depot has been rising. Do I think it's too risky to buy it before the CPI? So the buy. So here's the daily chart of the of Home Depot. And if you take a look, it's not in a trend, right, Nancy? So I think the first thing that I would recommend is, if we're looking at Home Depot, I think sometimes we think about the Dow, right? But I think lesser considered oftentimes is the ITB and the XHB, right? And so when I start looking at ITB and XHB, I want to be aware of the other names that are slightly more heavily weighted that could be in play, and therefore also on the watch list for a buy. So when I look at these names, ultimately, it's not that I don't like it. My issue is mostly, my issue is mostly just sort of which one of the many could pull back, right, Nancy? So I don't want to buy it at the highs. Let's get the first thing out of the way. I don't want to be buying it at the highs. No way, no how, right? So after we see a surge like we did yesterday, I don't want to be buying it at the highs. What I do want to focus on are two things. One, the 200 propulsion, those white dots, and then sort of, the aforementioned daily price movement ranges. So for those of you that don't know how these things work, let me show you an example here with Nancy's question. So what I'd be looking for, let me grab my drawing tool here. All right, what I'd be looking for is a candle like that one right there. So this is Monday's candle. This was Friday's candle, right? This is Thursday's candle. So think about the price action on Thursday. Gap down and it kept selling off into the gray zone there. That's what I'm looking at, right? And then some of you that are in the mastery especially, or have the Darvis 3.0, will also notice we had a minor low pattern right here. So that's the minor low. So that's another long trigger, right? So that's what preceded the move higher. So my thought is always, is this the candle to act? And for me, it nearly never is, right? Or after this candle. The most aggressive entry would be just below the 306 level. That was the high of the Friday candle. Or ideally, as we sunk down into the daily price movement range. All right, so I always think of what's upstream of, say, Monday's candle, right? What's upstream of that candle? And I don't want to think about that candle being the reason to buy, but what were the opportunities at support that could have given us the reason to buy? So does that make sense, Nancy? Is it too risky before CPI? Actually, it's too risky because of yesterday's candle. Take the CPI hot zone out of it. It's too risky because it's already made the move. It's arguably already triggered either a daily price movement range buy closer to about 302 or a minor low buy through basically around 305.65, right? So I don't want to be buying it here at 310 or wherever it is at the moment. And I can look at that here real quick. Let's see. What's that 5-minute candle telling us? So right now we're trading at around, that 310 and change. So I would wait for a pullback, preferably into the daily price movement range again. So yeah, awesome. All right, question from our YouTube channel. Kevin asks, good morning. Newbie question. We were always, what is it? Beginner's mind, as they say. How do you know where the bag holders are? Kevin? Yeah, so for those of you that are wondering, okay, what the heck's a bag holder and why would I care? So everything is volume in that regard, right? So one of my mentors used to say trading is all about trying to figure out where the most pain is being experienced. So basically a bag holder is someone who is long from a certain level and price is below it, right? For those of you that may not know the trading lingo. So Kevin, specific to bag holders, I'll be frank. There's so many different levels from which I'm wondering who holds what, right? And the answer is always, and it's a funny one because it's remarkable to me that most traders don't prioritize this in their trading, but whatever, as long as you all know how to do it, that's all that matters to me. It's volume, Kevin. So whether it's bag holders, whether it's big money, whether it's whatever, right? At the end of the day, price-based volume. Price-based volume. Am I going to know where the bag holders are? No, right? But you do know where the volume is. Am I always going to know where institutional money is at? No. But I will know where the volume is at. So I hope that makes sense. I think there's a lot of talk out there as if we can decode one type of participant from another. No, gang, it's just volume. It's just volume. And as long as we know where that volume is, does that make sense, Kevin? So I think what you're honing in on is an important question, which is, where is the size? Regardless of the reason, regardless of whether it's retail or commercial, institutional, whatever, right? Where is the size? And that's where price-based volume tools like an anchored volume weighted average price, like the volume profile that's sitting along the right edge of this trading view chart, like the point of control, like my V-score, right? That's another thing that measures price-based volume. So however it is you choose to decode that, in that mix will be those kinds of participants. And I hope that makes sense. So it's not that knowing where size is unimportant. We're just never going to know who it is that's necessarily there, but we know the size is there, right? So that's the way I look at that. And that's not a new question at all, my friend. That's something that I think even experienced traders, you know how many times I hear experienced traders say volume at the price level doesn't matter? Or they think they're decoding them. When you look at FinTwit, right? Financial Twitter or whatever, people saying it's only price. No, it's not only price, right? It's price. That's the first layer, if you will, of the conversation. Below that, sort of the glacier, if you will, we can see price protruding above the water, but below that, much more important is volume, volatility, and time. So you're definitely talking about one of the 4 factors, and definitely something that is important. Yes. All right. Next up, DB asks, how much do I focus on the NQ in the futures room? It's pretty much all I trade. It depends on the day, DB. So for example, today, so every morning I start off by looking at futures. If you have a favorite symbol, I'll be straight up. I'm probably not the trader for you. If you have a symbol that you just want to focus on that, I don't want to waste your time, DB. I'm probably not the one for you. The way I start off my day, just to see if it's something that would fit your needs, is I'll start off by looking at the 3 major indices, and I focus on the one that has the best relative strength, the best clarity. On the days that it is the NASDAQ, great. The NASDAQ is, by the way, the most important index, right? It's funny, the amount of attention the S&P gets, but hilariously, to me, it's the least important of the 3. Hear me out. NASDAQ is XLK, XLC, XLY. XLK meaning the king of the sectors. Dow has XLK. S&P is weighted a lot like the NASDAQ with a little bit of financials and healthcare thrown in. So at the end of the day, the S&P really is kind of a combination of what's going on in the Dow and the NASDAQ, and it's going to track with one of them usually. If they're both going in the same direction, the S&P will follow suit. So I do think the NASDAQ is a very, very important index because of the weighting, the disproportionate weighting that tech has across all three of the major indices. So if the NASDAQ happens to have the best structure, if it happens to have the best clarity, then that will be my focus. And then not only will it be the NASDAQ, we could look at the QQQ, Apple, XLK, etc. So everything will come from that understanding of that top down. This is the clarity in the NASDAQ, or this is the clarity in the S&P. So it depends on the day, right? But if you're just wanting to trade NASDAQ every day, and that's your focus, not NASDAQ related names, I would say that I don't know anybody at Simpler that focuses only on the NASDAQ. So, but it does come up every day, right? There's no morning, it being the most important sector, that it's not going to come up in conversation. Am I always going to trade it? No, I'm not going to tell you anything like that. I don't always trade it, but it's absolutely always discussed. All right. Okay, next up, Starbucks. Consumer discretionary. Starbucks is quite attached to the NASDAQ, kind of talking about the NASDAQ there. Starbucks is one of those stealthy little names that is going to track with XLY, and XLY is going to track with the NAS most often. I'm not a big fan to the long side. Starbucks could play a game of catch up, but I would wait, Pete, until it gets back above the 200 exponential, or the propulsion dots that I use on my chart. All right, from our training room, Christy asked about DVN. And, DVN's looking better and better as long as things like crude oil and natty gas can find floors. Bank of America, I do like the big bank narrative, but I'd say JP Morgan's a little bit more something I'm a fan of. It's in an uptrend while Bank of America is in chop. But both Devon and Bank of America are buyable from their daily price movement range gray zones. That's the support. So I would be bullish on both, Christy, and I would focus on the long side, not a mean reversion because neither are trending, but definitely gray zone or point of control. If you want to, again, kind of going back to the question earlier from Kevin about volume. Yeah, find the volume. And when it comes to, as you can see here, Devon, the point of control is just above 49. So getting above that, Christy, will be really important. Yeah, will be very, very important. All right. So next up is Nike. Also part of consumer discretionary. Nike's in a downtrend. So much like Starbucks, what I'm going to do is let's look at this here real quick. If I open up the XLY, crack it open, as I like to say, look at the heavily weighted stocks in it. And I'm going to ask myself, where is the strength, right? Is it in Nike? That's a downtrend. Is it in Starbucks? That's a downtrend, right? So both those two stocks are great candidates for potential shorts. But if I want to be long, it's nearly almost everything else in the XLY. And if the general gist of the markets are going to be heading higher, which is why I've been saying buy the dip for the better part of probably over a year now, barring unforeseen events like the regional bank crisis, the long side of the market is working, right? So if we want to take advantage of weakness, Nike and Starbucks would be at the top of that bearish watch list. But if I want to be a buyer, Amazon, Tesla, Home Depot, Lowe's, TJ Maxx, Chipotle, those would be on the bullish watch list. So one cool thing a lot of traders can do is when you're putting your watch list together, have a bullish watch list and have a bearish watch list. And then okay, on an up day, is there an opportunity to short the rip? And on a down day, is there an opportunity to buy the dip, right? So thank you as always. Thanks, Ronaldo. Yes, gang, if Charts and Coffee is a needle mover for you, I appreciate it. Smash that like button, and I'll see you tomorrow. Same time, same station. Be good to each other, gang.